This is Bob Anderson, and I'm going to do a quick video on November 16th, 2022 trades. I want to talk about something I didn't talk about before, and I probably should have. But, normally this doesn't happen, what I'm about to talk about. But the last 2 days, it has happened. That being today, the 16th, and yesterday, the 15th. And that is that the market moves so much prior to open that when the open does happen, it just sits. Couple things, last couple days, we've also had, and I'm going to try to hold my temper here, but we've had various times throughout the day that Fed clowns, these professional economists that have screwed up our economy, these Keynesian clowns, they've been talking to the Senate and stuff like that, and I think what's happening is it's just causing the equity markets to sit still, because you just never know if one of them's going to run something out of their pie hole that's going to cause the market to run up 800 points or run down 800 points. So we have had 2 days in a row where we have been range bound after the open. And yet, as you guys know, I try to focus on trading the ES at 9:45 to 10:30. Look for my continuation trades, take them, and get the heck out. So I'm going to show you what I mean by range bound for the last 2 days. I attempted to take a trade yesterday in the ES, and I didn't get filled. It didn't break. And I'm going to show you why I didn't take two trades yesterday that did set up. And then today I just said, I literally looked at it and I said, the hell with it. And I went back over to oil. I've had very good days. The last 2 days, hold on here. Let me look here. Come on, where is it? Yeah, I can't do the math because I'm doing it with 2 accounts, but I made, well, over $1,000 in oil the last 2 days. Well, today. Yesterday I made, well over $1,000 yesterday in oil. Oil's been very nice. Once it gets past its open and it calms down, it's been getting very rhythmic. I'll show you a trade I took yesterday, for example, at 10:13, a nice continuation trade, perfect. I took it for $400. It was 2 minutes. The trade was 2 minutes. Anyways, what I want to talk about is the kiss of death for price action trading is when you're range bound. Because when you're stuck in a range, if you think about the continuation trade or the gold line trade or any of that stuff, even my overnight open trade, you need price to be moving from zone to zone to zone. It always moves in zones for the most part, but it has to be moving from zone to zone to zone. It can't be sitting in a zone. For example, if you go back to what I talked about with the thrust and the pullback, and the thrust and the pullback and the thrust, those things do not happen if you're sitting in a range. There's not enough room. I mean, today's range was yesterday's range was 14 points, and today's was 12. 12 points. Today's range was 12. Today's was 12. Yesterday's was 14. Price can't move, rotate, create a spike and a pullback and then a continuation for 5 points when it only has 14 or less points to even freaking move in. So anyways, that being said, I think some trades probably did happen after it broke out of those ranges. I don't know. I don't trade it after 10:30 or so. I just give up, especially on a day like days like today. And I'm sitting there looking at oil, and oil just keeps, laying out biscuits for me. So anyways, so I'm going to show you these ranges yesterday and today. I'm going to show you the one trade I tried to take yesterday, and I didn't. But I totally stayed out of trading even today. Here's the point that I want to make. Just because a trade, just because it has a thrust and a pullback into the gold line, doesn't mean it's a trade. If the gold line, if all the moving averages are just basically flat, because then you're asking for it to do something that it's not even trying to do. Price, that is. You're asking price to go somewhere where there's no momentum to do that. Anyways, I'm going to show you these ranges. We'll go from there. Hold on. I'm back to the white since so many people complained about the blue. Since so many people complained about the blue. I don't know. I tried it. I mean, what the heck? Let's see here. Let's get this all blown up so I can see it better. So here we are. Here's yesterday. Okay, here is yesterday. All right. And this was basically 9:30. So this is the open. It broke up and pulled back down. And remember, I've talked about a lot of times what it'll do at the open, it'll fake one way, then fake the other, and then a lot of times it'll fake back. Well, here's what we looked at going into this. Look at that big move up from the 8:30 news. Okay, so I'm going to be perfectly honest with you. I was thinking, well, heck, this is probably going to go long. So when this ran down and set up right here at 9:54, I didn't even take this short. Now it did go down, I think about 3 points, and then it just reversed. But it just reestablished this range. So when we blew up through the top, okay, when we blew up, see this is where the shelf was over here on the left, that it broke down underneath and came in. So that's why I say this is the range at the top, this is the range at the bottom. You can see how it just started forming. So anyways, when we blew up here through the top, broke this pivot over here, and here's the gold line. So the gold line started moving, started going, and we're north of the red line. I'm going, okay. So I had my buy stop right here, right at the break of either one of these two candles right here, this red one or this green one. Matter of fact, the green one blew right up and almost took me in, missed me by a tick, and then this one came and just rolled right over. I mean, that was it. Because I thought, okay, here we are, we're off to the races. Because at this point in time right here, it's 10:05, 10:06, But thank God it didn't take me, because I would have lost. Now, I was biased to not take shorts. Let me tell you a quick story. I don't want to complicate this too much, folks. Really, I do not want to complicate this. I try to keep this as simple as possible. Part of the reason I wasn't even looking for these shorts, is if you think about it, when you have such a huge run up in the morning, this is your 5-minute moving average, your red 5-minute moving average. Behind it are those that trade with a 10-minute chart, those with a 15-minute chart, those with a 30-minute chart. Their moving average is sliding up behind it too. So you go from little money to big money to bigger money to bigger money. So you're battling against the established trend of the market. I mean, look at how much it blew up. So I had now granted it blew back down, but this is because somebody found out that Zelensky bombed Poland and blamed it on Russia or some shit like that. Anyway, so, here you are. I mean, that's news related. When that happened, it all just broke right down. But anyways, and that's later on in the day. So this was range bound. I tried the long, didn't work. I mean, the reality of it is if you go back and look at the continuation trades that work, they do not work in this consolidation zone from the open that the open creates. They work when you get out of the back and forth BS from the open. Because that's when you're running long or you're running short. But anyways, I tried to take this one, didn't. I still made very good money, but it was in oil yesterday. So let's talk about today. Let me get over here. Let me get over here. Where are we? Where's today's morning? I got my lines on here so I can see it. So today was even worse. Oh yeah. Okay, so here's the open today. So we were blowing around up in here at 9:30 to 9:45, which by the way, overnight open trade. Look at that. Oh my God. Yes, Bob missed that, just so you know. I just want you to know that I missed the absolute most beautiful overnight open trade right there. Of course, it was at 9:35, so you got to have a heart of a lion to do it. But look at that. I want you all just to look at that. Look at that overnight open trade right there. Bam, bam. Merry Christmas. You just bought everybody's Christmas presents. Merry Christmas. Right there. Bam, bam. Anyways, so we broke down into this range after 9:45. Came down to the floor. Up. Never got a setup. Here was the setup right here. You could have had this one. But see, you didn't really, because here's your higher high. I mean, your higher, your higher low. Here's your higher low. But this one broke down and then broke back up into the gold line. So this was a no-go trade for me. Remember, if this had gone from here to here to here, then this would have been a great setup. I didn't take this trade because I want everybody to understand what I'm saying right here. Here's your rundown. Here's your higher. This is your higher low than this one. This is your higher low right here than this one. But this is a lower high, a lower low than this one. And it hadn't touched the gold line yet. So when this one runs up and touches the gold line, this is no longer a valid trade because you do not have the smooth rollback. Now, if you did take it, it broke at 74.75. It ran down to 72 even. 74.75 to 72, just almost 3 points. Not a valid setup though. So then you ran up, and then you can't take any longs. This setup is a beautiful long, by the way. Did it get 5? No, it didn't get 5 points. It only got 3. Beautiful long, but you're below the red line. This came down, back up. I mean, it was just a quagmire. Just a quagmire. This pivot was not lower than this pivot. You had look at this gold line through here. Look how flat it is. Look how flat it is through here. All the way through 1030, all the way to 1030. Just flat. There's no trading there. There's nothing there. Nothing. If you have your 1 minute gold line basically at 39.78 over here and 39.78 over here, 30 minutes before, there's no trading there. Unfortunately. But you got to break out of those zones to get those trades, to get those continuation trades. If the market had collapsed down through here and kept on going, man, you probably could have played a lot of money. But anyways, It stayed in this zone for, look at how long it stayed in this zone. Holy shit. This is only 12 points, by the way, folks. This is only 12 points. Broke out of that zone here at about 11 o'clock. Then went back into it. I mean, it's just been a shitty day. It's just shitty days. I think there's just a lot of, speculation with the Federal Reserve. And I know they've been talking to the Senate hearings and all that kind of garbage. So let's talk about something that's not impacted by the stupidity of the Federal Reserve. Let's talk about oil for just a second. That's my baby. I've told you guys that before. That's the one I started trading in years ago. I just want to show you a simple example of a continuation trade that I took. I think this one was yesterday. Anyways, oil opens up at 9, but I don't pay attention to it at 9:30 either because, see, here's 9, it's doing its quagmire. By the way, here's the overnight open. See how it worked? Here's the overnight open. See how it worked? Anyways, so, I mean, the same premise things that I talk about in the ES, ironically, are in oil also, even though both markets really have nothing to do with each other. But they trade so similar. They really do. So anyways, so then you get to the open. I don't trade oil at the market open either, which is not its open. Its open is right here. Oil's open is at 9. 9:30 though, when the stock market opens, it acts retarded. It just gets all stupid also. So you just got to ignore it until you get like past, just like 9:45 I do with the regular market. So anyways, it comes up, gets into the red line, the 5-minute red line, comes back. Notice how it respects the 5-minute red line. Interesting, huh? Rolls down. See how it respects the 5-minute red line again? Rolls down. See how it breaks up finally and then comes back down. These are some pretty large candles, just so you know. But here's a continuation trade. Here's the first one. I missed it because, again, this candle is above the red line, above the gold line. The gold line's going up. All the moving averages are going up. Bam, there's your long right there at 85 even. Ran right up to 85.16, so about 16, 15 points, $10 a point. Anyways, this thing slammed back down into these averages. Your boy Bob pulled the trigger too early on this one contract, ran down, knocked me out. And I'm sitting there going, you clown. I clicked the button too close, and then I got dragged into the trade. So anyways, so I got a lot smarter and I got a lot more wise, and I said 2 contracts. I bought 2 contracts on the break of this candle right here that not only went into the 5-minute gold line, but it was just north of the 5-minute red line, still north of the gold line. See, it's a valid trade north of the 1-minute gold line. I entered right here at 84.98. Bam, 85.18, $400. Shabing. Right up into the overnight open. I should have grabbed this and moved it up into the open. I should have grabbed it for, I would have gotten another 6 ticks or so, another $120. And because look at what happened. Hits the overnight open, wham, back down, ram back up, ram back down. See how that overnight open just keeps pushing it down? We've talked about that. You don't want to trade into the overnight open. Anyways, I'm going to show you something interesting today at the end of the day in oil, just to show you the commonality between the ES and oil. Let's get right here this afternoon. All right, where are we? Okay, remember, this is your 5-minute gold line. Okay, so you had this, I'm going to show you guys this. You had this blow up. It crossed all the moving averages. Bam. Here's your gold 1-minute gold line, trades up, starts getting soft. Here's your 5-minute gold line, 30 ticks. 5-minute gold line, 30 ticks. 5-minute gold line, 40 ticks. 5-minute gold line, 50 ticks. 5-minute gold line. Anybody see the pattern there? 5-minute gold line is kind of cool, isn't it? By the way, I took 2 of those for one contract, 30 ticks a piece, $600 this afternoon while I was just sitting here watching it bouncing off the 5-minute gold line. I'm like, well, what the hell? I mean, why would you not take one? Why would you not take it? Let's see here. Where is it? Yeah, there they are. There they are right there. There's the entries right there. I was trying to figure out what account I put them on. God dang it. I swear. Anyways, I mean, after you see it bounce off so many times, it's like, okay, so here you go. 85.27, 85.57. I mean, just, and that was at 12.58. Bam. Anyways, there's one person that watches my videos that's going to be pissed that this is over 5 minutes, but that's okay. I really don't care. It's more about me getting you guys to understand why I didn't take any trades in the ES. I tried to take one yesterday along, didn't take it. But I'm going to probably start showing some more trades off oil if the ES is going to stay stagnant all the way to the holidays or whatnot. Because oil's definitely got some nice rhythm to it right now. But I don't recommend going and trading oil with your eval accounts. You need to practice with it, okay? And don't trade it when it's hot and heavy. So don't trade it 9 in the morning to at least like 10, I would say. Then just watch it. It's very rhythmic. It's very soothing. Anyways, everybody have a good day. Talk to you later. Bye.